Good morning. Last week, the European Union enacted high tariffs against electric vehicles made in China. And immediately, shares in Chinese EV car stocks jumped higher. The reason for that is that the new tariffs are ironically going to hurt European automakers and help Chinese automakers. The Wall Street Journal takes it from that angle right here. Europe is putting high taxes on cars from China, which are made by European companies here and shipped over to buyers in Europe. Almost all the European automakers are here in China. They opposed the new tariffs that the EU put on, and here's the reason. Fewer than 10% of the Chinese-built electric vehicles sold in Germany were Chinese-branded cars. Over 90% were either Tesla or from a joint venture between a European car maker and a Chinese factory. Now, this means the production costs are much lower than in Europe for these joint venture companies. The supply chains are all right here, and so is high-quality labor at lower prices. However, the costs are still lower for the Chinese car brands that are not joint ventures. BYD is the #1 manufacturer and exporter of electric vehicles now, and is just now starting to get into the European market. BYD has a new tariff of 17.4%, which gives BYD a lot of flexibility now on pricing. They can export from China to Europe and still make money. And their plug-in hybrid models don't have any new tariffs at all. It's only on all electric vehicles. BYD's profit margins in Europe are a lot higher than they are here in China, and their stock went up. SAIC is another story, though. They're a state-owned company here and got hit with a 38% tariff. In order to get around it, they will probably need to build production in Europe. The tariff on Geely is 20%, slightly higher than BYD's. They're still going to be making money, but it's going to really squeeze their profit margins there. These realities were reflected right away in these companies' stock prices. BYD was up 8% at the open, then backed off a little bit to close the day, up 6. Geely jumped 4. Nio and Li Auto were up 1.5. And SAIC was down 1.5. Analysts say that EU's message to SAIC is that they should build a facility inside Europe. They need a bigger footprint in Europe compared to BYD's and Geely. Here's a good summary of how this is all played out. The EU says that China has big subsidies for Chinese car makers, and they worry that as more people buy EVs, these Chinese companies will put European ones out of business. But those same officials are the ones who are forcing buyers to buy EVs in the first place. All new cars and vans in Europe need to be zero emission in about 10 years. So as more and more people are required to buy more and more EVs, China just makes them at a lower cost. It's as simple as that. BYD and Geely can build EVs faster and less expensively than European companies using Chinese factories. And the Chinese will make profits even with these new tariffs. And if they switch over to hybrids or build a factory or two in East Europe, they won't have to face the tariffs anyway. This is Qinghai province. Be good.
Love and mercy, so I can be a good husband to my wife, and be a good father to my children. Help me to be a good son to my parents, and a good brother